barely into the weeds, hence the framework of the 20% top line dive we're doing on this. And it's already, carry the 1, divide by 4, inverse ratio, it's like.
What happens is it's a loan that's repaid, but the portion of the loan that is forgiven isn't taxable.
Okay, so slow down. Because I think I don't know if there's anything we can do about it. Like,
I think there's something being done, but so you get money, basically you get money from the SBA.
Yeah.
And you spend it in the way they tell you to spend it, 75% wages or payroll and 25% rent and utilities, mortgage interest. And when you do that, the loan is forgiven. You don't have to pay it back. And basic tax law that goes back till day one says if you have a loan and you don't have to pay it, then you have income. So what they're saying now is that you don't have income when this forgiveness happens, but you can't deduct your expenses that used to get the forgiveness. So the effect is it's taxable. And what's happening now is conversation around changing that, because that's not the intent of Congress. The intent of Congress was, we're going to give you some money for a specific purpose so you can stay operating. If you use it for that purpose, it's tax-free. And if you don't, you have to pay it back. It's a loan. And a loan is never income, and the payment of a loan is never expense. And so that's okay. And it's actually a really generous loan. It's 1% interest, which is low, and you get 2 years to pay it back. And the first half of the year, you don't have to make any payments. So let's say I have $100,000 of PPP loan and I use $60,000 for wages and $20,000 for utilities, that gives me 80. I have to pay back 20,000 of that over 2 years, 1% interest, which is a lot better than paying back $100,000. So there's some really good things about the PPP. And as far as I know, there's in the neighborhood of 100 billion left. So if your bank still has PPP funds available to lend, I would recommend applying if you have the opportunity.
Could you, Dave, do me a favor, go back, you can maybe even use the same example that you just did there, or you can maybe use a second example to try to triangulate the truth a little bit, but unpack that part that you pay back part, like the 1,000 in that scenario that you gave. Could you just unpack that?
Sure. So the government, I apply and I get a $100,000 loan. So on day one, I have a loan, and the rules of the loan say if I spend 75% of that on wages, on payroll expenses, and I spend the other 25% on rent, utilities, those things, then I don't have to pay back the loan. It's forgiven.
Right.
So let's say in my particular case, I get $100,000 and I don't spend $75,000 on wages, which is 75%. I spend $60,000, right? And I spend $20,000 on utilities and rent.
Oh, so I see. So you just played with the percent. So basically you'll get assessed a very small, not very punitive type thing by not getting their ratios perfect.
Well, it's not about getting the ratio perfect. It's about, I got 100,000, but I only spent 80 on what they said I need to spend money on. I spent the other 20,000, but I spent it on paper or whatever.
Donuts. Yeah.
Donuts. So when I go to calculate how much do I have to pay back, I'm going to say, okay, well, I spent 60 on payroll, spent 20 on utilities and rent. I have 20 more to go. I have to pay that back. And if I got $10,000 worth of the economic impact grant, I have to pay that back. So I'm going to pay back 30 in that scenario.
Got it. Thank you for unpacking that.
A lot better than paying back 100.
I understand. Okay, so cool.
That's the value.
I feel complete about that little couplet there. Do you feel, is there anything else you wanted to do on our little kind of,
on the
10,000 foot dive?
The PPP, the important thing to remember is what the description I was giving was for somebody who has employees. But a lot of people are self-employed and they don't have employees. So how much is payroll? So there's a simple formula. You look at last year's Schedule C, which is where a self-employed individual reports his or her business earnings. And you take the profit and divide that profit by 52, so your weekly profit, and then you multiply that by 8. And that's your forgiveness. That's your maximum forgiveness for payroll.
And why do you multiply it by 8?
Because the repayment program for the SBA loan, the PPP, is 8 weeks.
Oh, got it. Okay.
So I multiply a week's worth of profit by 8, and that's my payroll. Because I don't have payroll if I'm just self-employed, not just self-employed. If I'm self-employed and I file on Schedule C, I don't have actual payroll. So that's how I determine how much is my payroll percentage, and then the rest I use on rent and utilities and so on and so forth. So that's that.
So what's coming up for me is obvious, which is that, we're barely into the weeds, hence the framework of the 20% top line dive we're doing on this. And it's already, carry the 1, divide by 4, inverse ratio. It's like, so, the point earlier made about speaking with a professional, and I'll put your contact info down in the comments in case anybody wants to do so. What's the last one that was on? It was kind of the stone in your shoe there that you wanted to make sure we rounded out our time together with.
Well, I think that was the economic payment, the stimulus payments, because we didn't talk about that in our first conversation, and a lot of people are really confused. So I just wanted to make sure that people understand that it is confusing, and just to ask questions and get guidance that's, sound guidance, whoever you trust to give you good guidance, and recognize that this stuff is changing daily. It's just an amazing, amazing period of time where the volume of change and the volume of information that is changing is it's insane. It's really incredible how much change is happening. So be patient, ask a lot of questions, get guidance. I think those are really the things.
Fair enough. Dave, thank you for your time, buddy.
Thank you.
Appreciate you.
All righty. Cheers. Thanks.
All right. Sounds
Bye.
good, man.